Hey traders, Roberto here. Here's another video on the continuation of Pro Traders Workshop series. Today's lesson is London Breakout. There are several different ways you can trade the London Breakout, and I'm just going to show you one simple technique that I do use. If I manage to get up early enough to trade, sometimes I can. Oftentimes, today I was lucky enough that I was able to take a trade before the London breakout based on price action. But let me just show you a simple technique that you can use. This is a 50 moving average line, this green perforated line that you see here. So before the London market opens, I look to see what is the direction of, and I'm looking at just the pound dollar, the pound yen, pound Aussie, pound Swiss. I look to see what is the direction of that currency before the London market opens. And generally what happens is that the trade goes in the direction of the overall trend. So if you look at pound dollar, price is below this 50 moving average line. And we were in a downtrend from last week, right? Notice there was a huge bearish engulfing candle. These candles tell us that there is a lot of bearish sentiment in this currency pair. So when I opened up this chart, I saw that on the 4-hour chart. I scroll down to the 1-hour chart and I see that price, yes, is still below the 50 moving average line. So coming into a new session, London breakout, I would favor that trade in that direction. The same thing on pound Aussie. Okay. 1-hour chart, price is below the 50 moving average line. So I'm looking to sell pound Aussie as well. And notice there was a green candle prior to this red candle. This is the Frankfurt. This is what is called the London bounce. When prior to the London open, price goes up and then the next candle goes down. So there's a nice trade on pound Aussie. Again, I'm looking for the 50 moving average line. Where is it? Is price below the 50 or above the 50? So the pound Aussie price is below the 50, so I'm looking to sell at the London breakout. Okay. And you can use a 15-minute chart for that. Wait for price to give you a sign that we are heading south. So price bounced off the 50 moving average line on the 15-minute chart and just shot down. And this is a window of opportunity about 2 hours. Usually I exit these trades by 6 or 7 o'clock Eastern, which is close to lunchtime in London. Because normally what happens when there's a London breakout, it's lunchtime, 2 hours, 2 or 3 hours later, and then you see the retracement. So you do not want to stay in that trade. You want to exit that trade. So if you took this trade here at the London Open, you'd be up like 63 pips right now. I'm sorry. Yeah, about 63 pips. Pound Swiss, pound CAD. Let's look at pound CAD. Look at all the pound crosses, pound CAD, and if you can line them up all on your chart so you can see them simultaneously, that's even better. Okay, I use a Tilson 3 line to help me in a 15-minute chart on the Smart Trader platform. There's a trade to the downside, and it's time sensitive, so you really have to enter that trade quickly because it moves very fast. Look at this, 1 hour, 15, 30 minutes, 45 minutes, and price has already moved what? About 40 or 50 pips. Really fast. 37 pips from the point of entry on the pound Canadian dollar. And what was the other one? All the pound crosses, I would look. Pound dollar, pound Aussie, pound yen. Okay. If we look at the higher time frame, the pound yen was already in a downtrend. 50 moving average line that tells us that we are in a downtrend. So we would favor selling. We would look to sell when price is below the 50 moving average line on the 1 hour chart or maybe even the 4 hour chart. See that? Price is below the 50 moving average line on the 4 hour chart as well. So you need to look at higher time frames to see what is the overall direction of a currency before you can scroll down to a 15-minute chart and take a trade. And the London breakout is such a powerful move between the hours of 3 a.m. to 6 a.m. Eastern that I would scroll down to the 15-minute chart. If I know price is below the 50 moving average line, then I know I should be selling the pound. Okay. As long as I have you guys, let me look at a currency pair that I took, and we're down, but on the pound, on the Aussie dollar. Okay. Now this trade is based on a higher time frame, so it's going to take quite some time before it's going to head north. So what we need is a few things. The stop loss is below the support at 72.23. This is a hammer. This is a reversal candlestick pattern. And price did break the body of the hammer. That's the body of the hammer on the price did break below, has retreated, but this is a longer term. This is probably will not work out till tomorrow. So we may see a dip, and if it goes down, I'll just buy it again. Okay, just buy it. If it comes back down, I'll buy it, and I'll buy it again down at these levels. And then I'll draw my trend line. Wait for a trend line break and just buy it again. Okay, but this candlestick pattern is a reversal, and all it's doing is retracing, because that was a huge move from the swing low to the swing high, and expect some sort of retracement before it goes back up. Okay. So again, the London breakout is not a hard trade to take. You just have to qualify the trade. Okay. Again, look at all the time frames. Look at the overall direction of the pound dollar, pound CAD. That is the direction the market should take at the London breakout, at London Open. Okay. There will be no trade room. Well, there will be a trade room, but it will be at 9:30 a.m. Eastern, and we're just going to go over price action techniques and the indicators. If there's a trade, we'll take it, but the markets are going to be really thin, and I expect just range-bound conditions during the New York session. Okay. Have a good holiday for those of you in the U.S., and I'll see everyone later today.